Cryptocurrency is volatile, with a history of boom and bust cycles that have many people questioning if a Bitcoin crash is unavoidable. The most well-known digital currency, Bitcoin, had a wild ride in 2021, reaching an all-time high of roughly $69,000 on November 10, 2021. However, it has been on a declining trend since 2022 and is now worth roughly $39,000. Hey everyone, welcome to Crypto Trends. In today's video, we'll discuss about the crypto bubble that is about to collapse. So make sure to subscribe to the channel so you don't miss out on any of our videos. So without further ado, let's get into it. Why is crypto crashing? Bitcoin has been on a roller coaster ride of late, surging and dropping drastically on the back of a number of news reports. But it was hardly the only cryptocurrency to experience a rocky finish to 2021. A drop in global markets has been prompted by persistent uncertainty about a new COVID version and increasing interest rates, which will make it more expensive for corporations to borrow money. This has poured over into the cryptocurrency market, combining with anxieties over additional regulation. The price of Bitcoin and a handful of other famous digital assets plunged substantially at the start of December. In early 2022, cryptocurrencies plunged again. Bitcoin's price sank to roughly $40,000 per coin around the end of January and has slid considerably lower as the year has gone on. Fears over U.S. interest rate hikes and China's continuing crackdown on crypto are playing a part. There has also been concern that Russia could ban crypto businesses in the nation. Why is Bitcoin so volatile? Unlike traditional types of investments, such as corporate shares, Bitcoin has no underlying asset. Its price doesn't depend on how well a business is functioning, but whether investors anticipate Bitcoin will climb or decline. This means that the swings in the price are based simply on speculation about how others think it will perform. As a result, there can be significant changes in the price of Bitcoin, even in the space of 24 hours. There have been a number of situations that have caused the price to fluctuate. Negative stories. A lot of negative reports and fears of greater regulation have pushed the price of Bitcoin down. These include Russia potentially prohibiting cryptocurrency activity. In May 2021, Elon Musk claimed that Tesla would no longer be taking cryptocurrency payments due to concerns about the environment. Sanctions from the Chinese government in June 2021 on dealing and mining Bitcoin. Donald Trump labeled Bitcoin as a hoax, vying against the dollar to be the money of the world later that month. UK banks limit payments to crypto exchanges. FBI officers seized millions of dollars in Bitcoin from crooks. UK's financial watchdog blacklists Binance, one of the top crypto exchanges. Big banks such as HSBC and Santander follow suit. IMF cautions. In August, the IMF warned against governments utilizing cryptocurrencies as legal cash, stating its widespread usage would undermine macroeconomic stability and might harm financial integrity. Crypto theft. Crypto hackers, Poly Network, stole $600 million in August 2021, only to return more than a third of it 4 days later, saying they did it for fun and to expose the vulnerability in the system before others did. Positive stories. But there have been many good headlines which have pushed the price upwards during the past year. Morgan Stanley became the first big U.S. bank to provide richer clients access to Bitcoin funds, but restricted to little more than 2.5% of an investor's total net worth in March 2021. In June, Elon Musk stated Tesla will likely accept Bitcoin payments again when more than 50% of its energy demand comes from renewable sources. Amazon releases a job ad for a digital currency and blockchain product lead, fueling rumors it may soon accept Bitcoin as payment. El Salvador makes Bitcoin legal tender. Other stories are more mixed in terms of what it means for cryptocurrency, such as the U.S. Central Bank, the Federal Reserve, pondering whether to develop its own digital currency. U.S. President Joe Biden released an executive order which intends to coordinate the U.S. government's operations surrounding the regulation of digital assets. While many crypto aficionados think regulation is a bad thing, some say this new presidential order could help with the development of digital assets to guarantee the necessary consumer protections are in place. Has Bitcoin's bubble burst? When assets grow very quickly in price and leap to a record high, normally this makes a crash much more likely, or at the very least a correction, which is when the price falls back down to a more normal level. This appears to be the predicament that Bitcoin is in right now. It took the cryptocurrency 11 years from start to reach to $20,000 per coin, but only 3 weeks for Bitcoin's price to double from there. A decisive year for crypto investors came in 2013. Bitcoin's price soared from $13.40 at the start of the year to its height in December of $1,156.10 before plummeting to about $760 3 days later. Fast forward to 2021, and the price had surged by more than 700% in 12 months. Where it is heading next is as unpredictable. Will Bitcoin recover? There are no guarantees when it comes to investing. As swiftly as Bitcoin falls, it might just as rapidly climb again. There are a number of concerns with cryptocurrencies. Crackdowns in countries like China, calls for more regulation across the globe, environmental concerns, its price is based completely on guesswork. Further regulation is considered as a threat to the decentralization of crypto, which is hurting on pricing. Bitcoin's advocates point to its excellent qualities. Transformative technology which could revolutionize industries. Simpler and cheaper transactions by eliminating away the middleman. Easier global trade. Transactions are more confidential. A safe store of value because it can't be printed or seized. Bitcoin has been hailed as a replacement to gold, suggesting it may prove itself as a hedge against inflation. Given its volatile nature, it is feasible that Bitcoin will gather momentum again at some point in the future, possibly weeks, months, or even years down the line. But no one has a crystal ball, so it's hard to determine for sure whether Bitcoin will crash in the future. What value do cryptocurrencies have? This question hasn't been asked because the crypto bubble has been dominated by bullshitters in the echo chamber for so long that absolutely nobody has bothered to ponder what we will ever use this technology for. I know, it's the technology of the future and it will promote global trade, but we already have both of those things in the considerably more stable US dollar. I can pay my coworkers in Russia or South Korea in a second with considerably fewer costs by utilizing USD than I can with cryptos. The truth is, none of us have ever utilized the blockchain that backs cryptocurrencies, the technology we're told we're buying into and promised that would someday form the backbone of the internet and global finance. We may have utilized the coins as an investment instrument to gain money, but when have we employed the technology itself? We haven't. Of course, that could change in the future, and the technology can be more valuable than the promises as investors and general public become more educated about the underlying technology. Why are institutions getting involved? If it's on the side of a bus, it's time to buy, screams an advertisement from Luno in London. Many seasoned investors feel the ad should suggest the opposite. If everyone is talking about the same thing, it's a surefire warning that prices have reached unsustainable heights and are ready to drop, as they did in 2018. But in the past 12 months, firms and institutional investors have gingerly put their toes into digital assets. Since central banks throughout the world responded to the coronavirus pandemic with easy money policies, huge asset managers and hedge funds have been seeking for strategies to shield themselves from a return of inflation and the depreciation in value of various currencies, including the dollar. We've seen a step change in institutional interest last year, says James Butterfill, an investment analyst at digital asset expert CoinShares. He notes that about $54 billion of money is invested across 120 cryptocurrency funds. A year earlier, the overall sum was $3.5 billion among 89 funds. Cryptocurrencies are here to stay, stated Christian Nolting, Global Chief Investment Officer of Deutsche Bank's International Private Bank, in a report. Central banks are also considering the prospect of issuing digital replacements for domestic currencies. To some observers, central bank digital currencies provide legitimacy to the crypto space, while others say it is an attempt by central banks to wrest back control of the industry. Central banks have always thought that they were key for payments, says Randy Krosner, professor of economics at the University of Chicago Booth School of Business. And now they've realized they're not. But does it mean that the risks of cryptocurrencies are going to diminish anytime soon? As the uncontrolled market bounces through its recent price gyrations, it is a long way off from either stability or security. Will Bitcoin go up if the stock market crashes? Not necessarily. Supporters of Bitcoin see it as a diversifier in balanced portfolios, but it did no better than stocks at the onset of the coronavirus outbreak. This is because investors panic sold everything. In the first 2 weeks of March 2020, Bitcoin fell down almost 40%. That was when we saw all equity markets take an aggressive leg down because of concerns about COVID-19, adds Rosie Bullard, partner and portfolio manager at James Hambro & Partners. So, it wasn't exactly a store of value in an equity market reversal. That said, how crypto assets perform during stock market falls will depend on why financial markets have collapsed. If it were an inflationary event, such as we witnessed in 1974, most Bitcoin investors feel it would give protection. Conclusion. Is Bitcoin here to stay, or is it a bubble ready to pop? Less than a decade old, Bitcoin is worth hundreds of billions of dollars. To be exact, more than $750 billion. The cryptocurrency promises to transform global banking by placing control of currency in the hands of individuals, not states, and making financial exchanges more transparent, efficient, and democratic. But is Bitcoin actually a secure bet? Supporters say the excitement around the cryptocurrency is justified, and previous opponents, including officials at JP Morgan and Goldman Sachs, are progressively hopping on the Bitcoin network. On the other hand, detractors claim this extremely volatile digital currency offers a platform for criminal behavior, including money laundering and trafficking of humans and drugs, free from official scrutiny and control. And they claim Bitcoin has no intrinsic value. The price is predicated on market enthusiasm rather than genuine utility. Now, the decision is yours. So, what are your thoughts about Bitcoin? Will it be able to recover back to $60,000 or maybe $70,000? Please share your thoughts in the comments section below. This would help others while investing. With that being said, here we come to the end of our video. I hope you liked this video. If so, then don't forget to subscribe to the channel so you never miss any video. See you in the next video. Till then, take care. Thanks for watching.